Interested in yield that's up to 3 times higher than what the stock market gives you? Want safe growth with big dividends? Like the idea of sleeping extremely well at night with your investments? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, please give us a big thumbs up if you find value in our videos. Helps us to get the word out and grow the channel, and I'd really appreciate it. It's a low yield world and we're all just living in it. The S&P 500 yields a lowly 1.35% as I shoot this video. In terms of income, that's just not going to get the job done unless you have millions of dollars in stocks. But there are a number of stocks out there offering yields much higher than this, and you don't have to chase yield on low quality junk stocks in order to get your hands on some of this income. In fact, there are a number of high quality dividend growth stocks out there that offer safe growing dividends, and their yields are much higher than 1.35%. Utilities are a great example of this. We can't live without electricity. It's a service that has built-in demand. Utilities that reliably provide power reliably produce profits, and they reliably pay out big, safe, growing dividends. Today, I want to tell you about 3 high-quality utility dividend growth stocks yielding 4% or higher. Ready? Let's dig in. The first stock I want to tell you about is Algonquin Power and Utilities Corp., stock ticker AQN. Algonquin is a renewable and regulated utility conglomerate with a market cap of $11.5 billion. This Canadian utility is super interesting. Whereas most utility businesses are geographically locked into one service area, Algonquin has assets all across North America and even some international assets, namely in Chile and Bermuda. This mitigates their regulatory and natural disaster risk since they're not overly exposed to any one region. If you like it when your energy is as green as those dividends, Algonquin should definitely be on your radar. 55% of their generation capacity is comprised of renewables, and the company is aiming to get that number up to 75% by 2023. This is one of the greenest utility businesses I know of. But wait, there's more. They also have a water and wastewater utility business. While a lot of other green utility and water utility stocks trade at high multiples and offer low yields, Algonquin doesn't. I think that is an opportunity. The stock yields 4.5%. That's more than 3 times higher than what the broader market yields. Even with that high yield, you don't sacrifice growth. The company just increased their dividend by 10% in May, marking the 10th consecutive year of dividend increases for the utility. Revenue and earnings per share have both increased 6-fold over the last decade. 6-fold on a utility. That's incredible. And the valuation, in my view, is reasonable. That's particularly so for a stock that's compounded at an annual rate of nearly 15% over the last decade. Based on adjusted earnings per share, we're talking about a price-earnings ratio of 23 here. That's high compared to a normal utility, but compared to other faster-growing utilities, especially across green energy and or water, that's not high at all. This is a compelling long-term idea for dividend growth investors after dropping 7% year-to-date. The second utility dividend growth stock you should take a look at is Southern Co., stock ticker SO. Southern is a gas and electric utility holding company with a market cap of $65 billion. This is one of your traditional big American utility businesses. It's the second largest utility in the United States based on its customer base. Their massive size gives you stability. Their 9 million customers across 6 different states pay their bills and count on Southern to provide reliable power. This massive ecosystem is what leads to big profits and big dividends. Southern is doing more than $20 billion in revenue per year, and a lot of that revenue distills down into net income, which largely gets returned to shareholders in the form of a fat dividend. No, this business isn't growing like crazy. Instead, this is a steady Eddie utility that you can sleep well at night owning. it slowly plods along with ever higher revenue and earnings per share over the long run. Instead of big growth, you get big income. The stock yields a mouth-watering 4.3% right now. You're not going to find a yield that high everywhere, especially if you're sticking to high-quality dividend growth stocks that can reliably pay and grow their dividends through thick and thin. Yet that's exactly what shareholders have been getting with Southern. They've increased their dividend for 20 consecutive years with a 10-year dividend growth rate of 3.5%. And unless 9 million customers suddenly stop demanding power, that dividend will likely continue to flow and grow for years to come. The stock is not extremely cheap, so look for any kind of pullback as a chance to pull the trigger. In my view, this stock's valuation is slightly above fair. The price to cash flow ratio, for example, is 9.3. That's a bit above its own 5-year average of 8.9. And the 4.3% yield is a tad lower than its 5-year average of 4.5%. The price to earnings ratio at over 19 is a bit high for a slower growing utility, in my opinion, but a 5% pullback would be enough to put this stock at a 4.5% yield, which could make it buyable. If you want a large utility business to give your portfolio a high level of stability and a juicy yield, Southern is a name to keep in mind. Last but not least, let's talk about Pinnacle West Capital Corporation, stock ticker PNW. Pinnacle West is a utility holding company with a market cap of $9.5 billion. This is the smallest utility business I'm featuring today, but don't let its size fool you. This utility packs a punch. What I think is really appealing about it is the location in which it operates. The company principally serves as the parent of Arizona Public Service, Arizona's largest and longest serving electric utility. With Arizona growing in population like gangbusters, that means more utility customers, higher revenue, higher profit, and higher, you guessed it, dividends. The stock's market smashing yield is right at 4%. So that yield is slightly lower than Southern's yield, but check this out. They've increased their dividend for a decade straight with a 10-year dividend growth rate of 5.8%, which is way higher than what Southern shareholders have gotten. The higher dividend growth rate is possible because Pinnacle has produced a higher bottom line growth rate over the last decade. And based on their service territory, I think that outsized growth is set to continue. You do have to sacrifice a little bit of yield here in order to access that higher growth rate, but it might very well be worth it. Another thing to consider is that Pinnacle West is due to increase their dividend with the next dividend declaration in October. Southern already increased their dividend for the year, so Pinnacle's yield isn't necessarily all that much lower than Southern's on a go-forward basis. This might be the cheapest stock on the list. Southern appears to be a bit overvalued. I see Algonquin as reasonable, but Pinnacle West definitely looks undervalued across the board. The price to earnings ratio is below 17. That's not bad at all when you look at the historical growth and potential future growth. In fact, we recently put out a video showing how the intrinsic value for the stock could be over $89 a share. With the stock at less than $84 a share right now, there's some nice upside there, and that's on top of the juicy 4% yield you collect while you wait for that upside to manifest itself. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these 3 utility dividend growth stocks yielding 4% and higher. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description and see my portfolio and start getting my buy and sell alerts. I'll see you next time.